Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and today we're talking about Alibaba quarterly earnings that came out. They were very good. Honestly, if you look at it underneath the surface, our main man, Charlie Munger, is probably very happy with what he saw. Dylan and I are both shareholders here. We're going to talk about the earnings call, get into a little bit about what's going on, and whether or not we're truly seeing a multi-year low on a great bullish story.
Ooh, multi-year low. All right.
Two stupid guys trade stocks.
Multi-year low. Ooh.
Well, possibly. We'll go to the chart kind of towards the end of the presentation and look at some financial metrics compared to where they were then, at the same price. That's what we're going to talk about it towards the end of the presentation. But my main man, Charlie Munger here, I'm pretty sure he's laid back and relaxed, looking at these earnings, going, "Damn, I was right again."
Yeah, I mean, it's like finally some relief, right? Like we've gone 12 rounds just getting the shit kicked out of us, and like finally it's like, all right, hold on, we might have something here. So this is great.
Exactly. So it's been a really good week for Alibaba shareholders, up 10% overall in 5 days. Ridiculous, huh?
Yeah, a lot of volatility too, all over the place.
Yeah. Yeah. I mean, look at this. Just gap up, basically.
Mm.
When you're beaten this far down, and the financial metrics get to this point where people expect nothing from you, nothing. It's not kind of very hard for them to over deliver on what was kind of promised or expected from them.
Yeah, this did ruin my trade in an earlier video, though. I was going to take a call after this. I got to see what happens the next 5 days. So for those of those who watch the video, stay tuned.
Yeah. Okay. From a technical swing trading perspective, I get that. The kind of headlines you're seeing here basically are talking about being a kind of a mixed picture, right? That they did do relatively well. They had a little bit of earnings growth of revenue wise. I'm sorry, which was a positive development, right? When they have all these new stories about China lockdown, softening the Chinese economy, it was not exactly expected them for to blow the doors off and return back to their 20-30% revenue growth, right? They did, however, have a loss as far as bottom line profit. However, I will caution you to say that Alibaba, much like Berkshire Hathaway, Charlie Munger's other major investment, that the total profit and loss is not exactly a great metric for understanding that business, because they have a lot of investments in other businesses and they're subject to market whims in terms of valuation, right?
Right, that's fair. Yeah.
So,
Market's
yeah,
down, their
exactly.
investments are going to go down. It's the ebb and
Exactly.
flow.
Exactly. But when we look at the core business, it was some very positive things, I think, throughout this earnings report. Okay. So
Before
these
before we get started here, if we could just, Vinny had to listen to an hour and 40-minute Chinese to English translation earnings call. Just give us a like and subscribe
Oh,
for that. That's a lot of hellish work. Thank you, Vinny.
yeah, no, I appreciate it. It was definitely interesting. Um, from a kind of revenue growth standpoint, what you really see here is China commerce, which is like their main core business, was roughly flat. Right. Unfortunately, within that, when you did see some cannibalism where the direct sales to consumer was up 6%, but their kind of consumer management division, which is the more highly profitable division, was down about 7%. So it was roughly about -1% in terms of revenue from that segment. However, the other smaller segments of Alibaba here have actually had some pretty significant growth. I mean, if you notice, there's a couple of units here, still very small compared to like the China commerce, but 20 and 30% growth within those units.
Yeah, that's pretty
Yeah,
solid. That's pretty good.
exactly. That was like a major kind of highlight of this segment. And when you even look back on a 6 month basis, they're growing, but they actually even reaccelerated a little bit more in this quarter.
Yeah.
The other major thing that, as a shareholder, that kind of made me get a semi-erect position here, um, was this
That's what she said.
share-based comp coming down 23%. Right? That right there is showing me that they're being very careful about rewarding with shares. And then, it's I understand in technology-based businesses, it's something that you need to do, but they don't want to be handing that out like the Simpsons episode where there's just a roll of it on the wall, right?
Right.
Um, you got to be careful with that, and I appreciate them being a little more diligent with that, right? So when we look at their kind of cost to revenue here, this is basically looking at how much of their revenue they're spending in different segments of the business, right? If you looking back here at this, this cost of revenue, roughly flat, nothing changed really there. The product development, roughly flat. The major kind of difference here was this sales and marketing expense. They brought that down from 13% down to 11% in terms of portion of revenue. And when you're looking at the general administrative, that was about flat. This kind of really seems to be, from listening to the conference call, a result of the new CFO trying to institute cost-cutting measures and being a little bit more careful in terms of what they're spending in terms of customer acquisition is what they talked about on the conference call.
Okay. All right. I mean, this is all pretty solid news right now because like other companies have not been doing that well. And you would think with the COVID lockdowns, this could have been a lot worse, a lot worse.
Exactly. They talked about specifically regarding their Singles Day sale, the 11/11 sale, right? They said that because of lockdowns, they had about a 15% impact from their customers in terms of their ability to access their customers from like a logistical standpoint of lockdowns. So that's kind of what they're looking at. And then the actual total merchandise volume they said was flat year over year. They didn't have any growth, but they also didn't have a kind of a downtick, despite the fact that 15% of their customers were inaccessible to them at that point
I
in
mean,
time.
that's huge. No growth and you couldn't reach 15%. That's something that doesn't get released in an article, right?
Yeah,
They just
exactly.
see there wasn't any growth. Yeah.
Exactly. You have to do a little bit more due diligence to kind of come across those sort of facts. Now, this is really where that loss comes from this quarter right here. This kind of write down of 42 billion renminbi in investment value. Much of that, like I said, tied to Ant Financial and their other kind of investments. But that is not a cash charge. That is just simply an accounting gap requirement that they must do. I think it's like 2018 or so, business is required to do it that way. Now, this is really where the rubber meets the road in terms of valuing businesses, at least in my personal opinion, as far as free cash flow. Right? So when we look at gap, that has to include the lost investments, but free cash flow does not. This is not adjusted for that. You're looking at the numbers here, this kind of grayed out box right here. So we're looking at 2021 22 billion. This is that renminbi. This is their currency. They're 35 billion this year, about 5 billion US dollars of free cash flow from this quarter. Right? If you're looking at their current operating margin, it's up here, the 6.6 billion USD, and then they had purchase of property, plant, and equipment. That's that capex. That's them reinvesting back in the business, about 1.5 billion USD. So they generated this $5 billion in this most recent quarter. All right.
Okay.
The other thing we want to talk about here is go down to this kind of portion right here in the green circle, looking at their net cash position. So when you're valuing the business, you have to kind of take out any excess cash that they have in the business because they still have a fair chunk of cash sitting on their balance sheet, about 45 billion US dollars still. Right? It's going to come into play a little bit when I show you what some of the financial valuation metrics here in a little bit.
So they're sitting on some fat cash right now.
Yeah. For a $200 billion company, too, don't forget that. Like 25% of their value is literally cash sitting in the checking account.
Yeah, that's Intel numbers.
Yeah, well,
Well, not quite.
yeah. I like Alibaba better than I do Intel, okay?
Good, because I fucking
Um,
hate Intel.
yeah. So the other nice thing we finally saw here, so EBITDA margin basically is they're designed to show like how profitable each business segment is. And obviously China Commerce is their cash cow. But we've seen both now this K-Now, which is their logistics arm, has actually turned to a free cash flow positive enterprise. Still very, very small, but it is actually now positive. It's only now the third one to ever turn positive. Their Alibaba Cloud, 2%. That was basically flat with last year, but it's still roughly keeping track with what they're investing in it. Right? They're not exactly burning cash in their cloud enterprise anymore.
Right.
So, how are they getting this money back to shareholders? This is kind of the share repurchase program here, right? They talk about how many they've bought back, and the other interesting thing I went back and did some numbers on is, at first glance, it's only $2.1 billion in the last quarter, right? That's not as good as you would expect. When they made $5 billion of free cash flow, right? In that particular quarter, they put 40% of it back into shareholder hands. However, they made sure to kind of note that they've actually accelerated that a little bit. As you notice, there's this date right here on November 16th. So that they give you a little guidance into the next quarter as far as how many they've been doing.
Right.
So if we look back here, 13 billion plus which was what from June quarter, 2.1 billion that was done in this quarter that just got reported. So 15.1 billion total. But now if you subtract out this number here, you're looking at this 18 billion minus the 50.1 that they had done as of the quarter. They've done 2.9 billion in this quarter already so far.
Yeah, I mean, you would think they'd be jumping on their share price like as soon as possible.
Yeah,
So
it
this
certainly
is a
seems
great
like they're
sign.
accelerating it. Yeah,
They're accelerating
and
at a price that they don't think that they should be at.
exactly, and they authorized an additional $15 billion. They still had about $7 billion of share repurchases authorized, So they added another 15 to that, meaning they have $22 billion in
Jeez.
remaining authorized repurchases as of November 16th.
That's
After that date.
like 10% of their market cap.
It is. And what I really have to credit for this, and like this was, I'm not at a point in my investing career where I know enough to appreciate like the kind of skill set. But this is a gentleman, Toby Xu. He's on the conference call. He's actually, I like listening to him more than anyone else on there as far as like what he has to say about Alibaba's business. Now, he just became CFO. It was April of 2022. So he's pretty new to this role.
Yeah.
And under his guidance, we've seen, it looks like, significant cost reductions, and that Alibaba seems to be much more focused on, kind of growth only if it delivers good value for the shareholder. They seem to have really understood and grasping the shareholder first kind of mentality, which is really nice to see from a communist country.
Right. Yeah. I mean, that's the huge risk with Baba, right? Is where it's at.
Exactly. They had a little snippet here where the CEO was actually Dennis Zhang was talking about him, but he's quickly demonstrated solid capabilities, leadership role, response to continually evolve the business landscape, and most of this is just like PR boilerplate garbage, to be honest. But I was definitely impressed. He definitely has like the accounting eye. He comes from PricewaterhouseCoopers, who is their actually accounting firm. In case you didn't know, that's their auditor.
Yeah.
Is
That's pretty
PricewaterhouseCoopers.
dope. That's actually pretty
That's where
cool.
he spent 11 years there as a partner prior to coming to Alibaba. I think it was in 2018 as the assistant CFO.
I mean,
So
that alone should ease you at least a little bit on the PCAOB's report for Baba, right? Because the
yeah,
CFO is coming from a guy who was auditing them.
yes, exactly. I get what you're saying. Yeah, that's a good argument. These are my kind of notes from listening to the conference call as far as things that I appreciated. So cost controls, they really are definitely focused on that. They did actually even talk about this since their IPO. We'll pull up the chart here in a second. 2014, roughly flat. Like they haven't moved a lot. They had a big mountain spiked up and then back down to the same level. But the core business has evolved tremendously during that time period. The revenue is 12x, EBITDA 4.5x, and free cash flow at 4 times what it was. And they also talked about how going back over the last year, about 70% of the free cash flow has been returned in terms of share repurchases. And they have this, total of $45 billion that was going to be authorized.
That's disgusting.
Yeah. The cloud segment is definitely underperformed from what I initially thought when I first bought Alibaba shares. They have this graph. They show 30% plus CAGR for the next 5 years in China cloud. They haven't been as granular in kind of information as I would like. They talked about this kind of loss of probably ByteDance and how they're still continuing to see headwinds from that. It sounds like it was a slow transition away. It wasn't like a complete like night and day off, but they're still facing headwinds from ByteDance allegedly ByteDance. They had never confirmed that, moving their kind of cloud infrastructure away from Alibaba, and also the macro environment. They're like right. Basically, they did talk about this in the conference call too, that they're not going to be expecting businesses to putting out a bunch of cash on kind of growth and development when they're looking at an economic environment that's a little uncertain, which is broadly across every conference call I've listened to in the last 6 months.
That's not a China thing. That's a world thing.
It is, exactly. But shareholder value is a major point of focus. They've really reiterated that's what they're trying to do, is deliver, value for shareholders and being really good stewards of capital and giving us good returns. I don't know if you want to show the chart real quick and then we'll talk about this slide.
So this is the weekly chart going back to 2000. This is 15. You can see in between 2015 and 16, we're chilling at essentially the same price. Now, granted, this is $58. We were at what is this? 320, right?
Yeah.
So basically, what Vinny's saying is they've had so many advances in so many different areas, but in terms of shareholder value, it's as if nothing happened, right? Mm-hmm. So you can argue from where we were at here, if this price was justified, this is equivalently way down here. This is much cheaper. Equivalently, there we are. It is what it is. This is a 10-year play for me and Vinny.
Yeah, it's something I plan on holding for quite a long time. So just to give you an idea of how cheap this company really is, they have a $213 billion market cap according to CNBC as of right now, $45 billion net cash position. They generated $5 billion of free cash flow this quarter. If you annualize that out to $20 billion, which kind of underassumes on some quarters and overestimates on others. But you're looking at about 8.4x. It's like getting 12% back on your money. Ridiculous.
Yeah, that's disgusting. Yeah, I mean that's completely wild. Which is why we are launching. If you want to talk about this, while I stand up because you won't be able to hear me.
Yeah.
Look at this.
So
Beautiful.
for Dylan and I, we designed a Alibaba bag holders T-shirt. So we're going to have this on our Etsy store. We're launching an Etsy store. This is all brand new to us. But if you want to kind of show your support for the channel and for Alibaba bag holders like everyone else on this channel, but you can consider getting yourself a T-shirt. This is our first foray into this kind of world, so by all means, bear with us. And if you have any problems, Dylan and I are like stand-up guys. We'll do whatever we can to kind of back everything up here. But like it is just such a cheap company. To give you an idea, Dylan, right? If you forget like this actual free cash flow portion, go back up to EBITDA. Alibaba is trading in the same kind of EBITDA multiples that you would buy your local pizza restaurant.
Yeah, no, it's absolutely disgusting. It's I mean, just that's 8 year or whatever it was, 10-year chart. It's pretty gross. Like they saw incredible gains. Now it is justified because there was a risk of being delisted, and that's terrifying because you go from having a bunch of cash to nothing. You're now trading over the counter. Those fears should be alleviated. We are obviously saying that it's not a risk. That's why we're in it, right? I don't think they're willing to kill their own economy. Those fears should be alleviated within the next 60 days, hence the trade. But yeah, I mean, there's not really a better deal on the stock market, in my opinion. And last but not least, the shirts are dope. We were either going to do an $80 scam education thing, like where we're like, hey, we'll just do the same video and you can pay us $80, but we're not douchebags. So we didn't want to be like Game of Trades or Everything Money, whatever you want to do, whatever you want to call out. Yeah. So like we make like $4.
Yeah. Yep. Definitely. Exactly. Even the cheapest of shirt delivers more value for content than some of these other YouTube creators. I'll tell you that.
Yeah. Game of Trades. All right. So, yeah. Let us know if you guys are going to invest in Baba. Thanks for watching.
See you in the next one.